Hey guys, welcome back to another video. In this video, I want to talk about the economic crisis in the US. So in our current situation, everything seems to be spinning and economy is in the spotlight. Frankly, it's not a very nice picture. Prices keep increasing, and matter of fact, people's wages are decreasing even though the numbers are increasing. And the Fed keeps saying, well, inflation is just a temporary jump, don't worry about it. But this has been going on for a long time, so it doesn't really seem like it. So when is it gonna stop? And it kind of feels like we're stuck in a never-ending loop, and our problems are not actually seriously addressed. So let me break it down for you, this economic crisis, and let's strive to understand it better together. And now to my first point, which is inflation on the rise. So inflation is basically a metric to measure how fast prices are actually rising up. So the government's aim for inflation is to remain at 2% all the time, which they say is the best number, but it's actually not the best number. Of course, the best number is 0, but they cannot actually make it 0 anymore. Well, what's worse is that it's not even actually at 2%, it's at 3.7% core inflation. And as of now, it is still far from the mark of 2% since inflation has been very sticky. And that's the thing. It's been soaring for a long time. Prices has been soaring for a long time. And even though people has been getting their paychecks or start their own business and they're earning money, every time money comes into their bank account, they're feeling slightly relief. But the next moment they realize they actually already spent it, most of it, which is very frustrating because the prices has gone up so much to a point that it's actually squeezing people's budget, and a lot of people is feeling the heat. And now to my second point, which is interest rates and the Fed. So the Federal Reserve controls the interest rates, and in their last meeting, they have decided to make the interest rates remain at its status quo, which is 5.5%, which is actually really high. It has been the fastest growth in interest rates in 40 years, the pace that they're increasing. Even though they have decided to pause this time, it still means that many people are going to struggle to borrow money because 5.5% is still very high, and many people need loans to do business. And when they do business, many people want to take the risk, borrow money, and then put it into the business. But now that the interest rate is so high, they'll struggle to do that. In fact, they'll struggle to buy a car or a house or even just borrowing or having a credit card. But at the same time, now that they have remained the same, it also makes the stock market looks more attractive. Because now that they stop increasing the interest rates, more people would think that, well, I guess the stock market is going to look more attractive than the bonds now, because in the past, when they increased the interest rates, it seems like the bonds is guaranteeing you a higher and higher interest rates to come. Even though whenever you have bought a bond, the interest rate is fixed, it does look like it is very tasty. And it will look bad for the stock market because more people invest in bonds. But now that the interest rate stopped, many people might go back to stocks. But also, the economy is not doing well, so companies are not also doing well. But in this case, the stock will look more attractive. And now to my third point, which is the 60-40 principle. So this 60-40 principle is basically you putting 60% of your investments into stocks and 40% into bonds. It's like a very principled investment method. So why do I want to talk about this? I want to talk about this because in this past year, this very principled method that is supposed to be safe, it's like from a guidebook even, it has taken one of its worst returns in a long time. So how is this happening? It's happening because the Fed has decided to sell bonds. And just think about it. If an owner of a company starts selling his shares, would you panic? For example, if Elon Musk sold Tesla shares, would you sell? Yeah, it's very conflicting because now you think that the owner has lost trust in its own company. And the Fed don't own the bonds, but it kind of has the same effect. And it creates turbulence to the bond. And it also, again, makes the stock market looks more delicious at the same time. And now that they have sell bonds and people are selling bonds as well, it will make bonds do bad as a performance. And people that do this method will lose money at the bond side, and plus economic instability, it will make the stocks do bad on the other side. And that's how it has one of its worst returns in many years. And now to my fourth point, which is government spending and debts. So the US government has been spending a lot of money lately. And so much so, kind of feels like they think that their money grows on a tree. Well, to them it doesn't grow on a tree. It prints out of a machine. But anyways, jokes aside, their debts are at $33 trillion and still counting. And this is a ridiculous rate. And at the pace that it's growing, it's very alarming for them. But the worst part is that they're gonna face a huge wall in the future. Because in a few years' time, they will spend most of their money, income, and debts paying off debts. They're gonna basically use another credit card to pay off their credit card debts, which is ridiculous. Yes, it is. And at the same time, they have to do innovation because they're the strongest country in the world, and they're not gonna be willing to back down for that. If not, they have to default their 33 trillion debts. So yeah, and they're gonna just have more and more debts. In fact, they must spend to pay back interest, and they must have more debts for innovation. It's like an inevitable spending, which is ridiculous because this is going to lead to the end of the United States. Of course, there's gonna be a solution to this. Cut spending or have better economy. But both are easier said than done. The first one is going to cause you to have less innovation and your weapons might fall behind in development. And the second one, like, how you cannot just increase your GDP. It doesn't work that way. You must have more businesses grow, and it doesn't just happen overnight. So yeah, they're in a very tight spot because of this debt situation. And now to my fifth point, which is what's next. So what's going to happen moving on from here? What's going to happen is eventually the Fed is going to lower interest rates. The question is just when, and the experts speculate it to be 2024, around there, maybe in March or June, around that time zone, or in a recession where they need an economical boost to the economy. If not, the economy will die. So yeah, they're going to pivot either next year, or unless we get into a serious recession before that happens, or a serious recession happens when that happens around June, and then they will pivot, or March. That's just my speculation and also some expert speculation. But what's the tricky part is how to keep inflation balanced while at the same time not completely killing the economy with interest rates, right? How do you manage to make inflation come down but at the same time not raise interest rates so much so that nobody can do any innovation or start any business? And how do you not kill the economy at the same time? Because higher interest rates also mean that less people want to hire, maybe potential high unemployment rates as well. So how do you avoid killing the economy while making inflation come down? Well, that's the current situation we're actually in right now, which is kind of tricky, and the Fed is trying to navigate through this situation. And for people to say that oh, we're gonna get out completely smoothly, everything's gonna be fine. It's impossible. It is actually inevitable that some things will happen, like high unemployment rates and making your budget on spending squeeze to a very tight budget. So yeah, moving on now to the conclusion of this video is that it is not weird to feel overwhelmed by this. In fact, actually, most of the people should be overwhelmed, and it's supposed to be that way, because if you have too low on stress, you also do nothing about it. Do nothing about it will just lead to a worse situation. But anyways, well, the problem in this situation is basically the surge in inflation, the Fed's decisions, and the bonds and the stock market not doing good, which is going to be a headache, while at the same time the government go on his shopping spree. So yeah, it's gonna be tough, but then if we create a strategy or a plan to just increase our income, which is much easier said than done, we should be able to pull through. Anyways, this will be the end of the video. I hope you like and subscribe, and I hope you will come back for my next video. So I'll see you in the next one. Bye.